Hello friends, today we are going to begin with contract costing. Now this is a very simple chapter with only a few concepts which we have to understand. Suppose there is a company which is involved in the manufacturing of cars. Suppose there are 10 employees who work 8 hours a day. So in one day we have 80 man hours. Suppose one car requires 10 man hours to finish. So you get an order to supply 100 cars. So for 100 cars, you will need 1000 man hours, which will be approximately 12.5 days. Or say let's round it off to 13 days. So the company will be able to complete this order of supplying 100 cars within approximately 13 to 15 days. Now, this is a job. You get one order which you have to complete. But let's say there's another company which is involved in the construction of bridges. Now, bridges certainly will take a longer period of time. You cannot construct a bridge in say 10 days, 15 days. It is a usually long term project which takes up to which takes more than 1 year. Let's say it takes 3 years. So this is a contract. A contract is a form of specific order where the job undertaken is relatively large and normally takes period longer than a year to complete. So, one thing about a contract is a long period of time. Where the company was involved in manufacturing of cars, you have a production line in place. All the raw materials are passed through this production line, and at the end of the process, you have the finished product. But that is not exactly the case in construction contracts. Each project is comparatively more complex given the environmental situations. So, standardization is comparatively less and the process is more complex in case of contract costing. Now, this manufacturing process takes place at the factory of the owner. The cars are manufactured in the factory and then sent out to the market for sale to the customers. But is it possible that, say, you have to construct a bridge in New Delhi and the company has an office at, say, Kolkata? Then, had it been the manufacturing of cars, then the company could have manufactured it in Kolkata and then transported it to Delhi. But can you construct a bridge in Kolkata and then shift the structure to New Delhi? Obviously not. So, whereas in other types, uh, in manufacturing a product, the production activity usually takes place at the factory of the company, whereas in case of contracts, the work is ordinarily carried out at the site of the contract. Now, this manufacturing of cars will have certain direct costs and certain indirect costs. Let's say the motor, the seats, etc. of the car are the direct material since it goes directly into the finished product. But the oils, lubricants, maintenance of the machinery, etc. These are indirect costs. But in case of contract costing, since majority of the work is carried out at the site of the contract, so the bulk of the expenses incurred by the contractor are considered as direct cost. The indirect costs usually comprise of office expenses and stores. So the office expense is mostly the administrative work. The bulk of the raw material used are direct expenses. The labor that are working on site constitute the bulk of the labor cost, and so on and so forth. Now suppose this company is carrying out three construction contracts at one point of time. One bridge at New Delhi in first location, second also in New Delhi but in another location, and third in Kolkata. So generally a separate account is maintained for each contract to ascertain how much profit has been made per contract. So now these construction contracts are usually longer period of time and they are a complex process. So the costs involved and the sale price is also high in these contracts. Say it might amount to lakhs and crores of rupees. Therefore, in order to control the costs and maintain to identify how much costs are being incurred on each of these contracts and how much profit is there, we usually prepare a separate account. Whereas in case of normal products which are not contract costing, usually one costing PL is maintained, one direct material ledger for whether you produce 10 cars or 100 cars, they are usually passed through one account only. Now, at one point of time, the company can take an order to make 100 cars or even 1000 cars at one point of time. But construction contracts are complex and of longer duration. Therefore, the number of contracts that one contractor undertakes at a given point of time is usually low, say 2 to 3. In case of manufacturing of cars, we represent the total cost per unit of the car manufactured. Say it takes 1 lakh rupees to manufacture one car. So that way we can calculate that for 10 cars you will need 10 lakh rupees, for 50 cars 50 lakhs, and so on. So we determine the unit cost of the product and thereafter keep on multiplying it to find out how much the total cost will be. But in case of a contract costing, each contract is a unit itself. A separate cost determination process is carried out. Say the bridge at New Delhi will take is 100 kilometers long, in the second one is 90 kilometers long, and the Kolkata one is 150 kilometers long. So the amount of cost that you will incur will differ in each contract. Also, the money you will receive for each contract will also differ. You might get more for this one when as compared to the 90-kilometer bridge. So the cost unit is the contract itself. So far we have seen that contract costing is a form of specific order costing where job undertaken is relatively larger and normally takes period longer than a year to complete. The features of contract costing are the major part of the work is ordinarily carried out at the site of the contract. Next, the bulk of the expenses incurred by the contractor are considered as direct. Third, the indirect expenses mostly comprise of office expenses. Fourth, a separate account is usually maintained for each contract. Fifth, the number of contracts undertaken by the contractor at a time is usually low. And last is the cost unit in the contract costing is contract itself. So first we have the site of the contract. Bulk of expense is a direct cost. A separate account is maintained for each contract. Number of contracts undertaken is usually low, and the cost unit is a contract itself. Now let us look at certain important terms concerned with contract costing. We have already discussed that a contract is a job that usually takes more than 1 year. So suppose you have the contract of construction of a road. Now this is a 5-year contract. You have started it, say, in the year 2015. So we have 2016, 2017, 2018, 2019. So you're expected to finish the contract by December 2019. Suppose you are standing in the year 2017. You are going to prepare your books for the year ended December 2019. So now 100% of this contract is supposed to be completed at 2019. Now you have almost finished half of the total time allotted to you. So you will have completed a substantial portion of work on the road. Say you have completed 60% of the work that you were required to do. So out of the 100% of the work, you finished a portion of the work that is 60%. When you're making your books in December 2019, you will have to determine this percentage. That is, you'll have to determine कि कितना काम हो गया है and कितना काम बाकी है. So, the first is a cost of work certified. For this purpose, generally an external expert is asked to evaluate the progress of the work. Now, suppose you are the owner and you have determined that 60% of the work is completed. But the expert says that no, only 50% of the work has been properly completed. So, this 50% that the expert has certified based on his assessment that the work is done, this is known as a work certified. So, suppose this total contract was for 50 crores rupees. So, he has certified that you have finished 50% of the work. So 50% of 50 crores that is 25 crores, is the value of the work certified. If you want to calculate the cost of work certified, then we calculate as the cost of work to date minus the cost of work uncertified plus the material in hand plus the plant at site. So the value of work certified is the proportion that the expert, based on his assessment, certifies is completed. So the remaining portion, that is out of 60%, the expert is saying that yes, 50% is complete based on his assessment. The remaining 10% is the work uncertified. That is, the work has been completed by the contractor, but it has not been certified by the expert. So next, now this is a 50 crores contract. Generally, for each contract, the entire 50 crores is not received at the end of contract. That is, you do not have to wait till December 2019 to get the money for this contract. Usually, a whole payment terms is laid down in the contract. Say, by the end of 2016, you'll get 10% of the amount, that is 5 crores. By 2017, you would have got 50% of the amount, that is 25 crores. 2018, may you'll get additional 25%, which will be 37.5 crores, and in December 2019, after the entire work is completed, you'll get the remaining 25%, making a total of 50 crores. So this is known as progress payment, that as you'll finish your work, you will keep on getting a part of your payment. So this can be decided basis on the timeline. That is, by the end of third year, you would have got 50%, fourth year can enter 75, and so on. It can also be dependent on the proportion of work done. Say, if you complete 20% of the work, you will get 10 crores rupees. By the time you complete 50% of your work, you'll get 30 crores. Another 25%, when 75% of the work is complete, you would have got total 40 crores, and when 100% is done, a total of 50 crores. So this is known as progress payment. Now 50 crores is a total value. Say for a simple example, when you take a house on rent, so the rent per month is 10,000 rupees, but you have to pay a security deposit upfront of equivalent to say 2 months of rent. So you'll have to pay 20,000 as security deposit and then 10,000 per month as your rent. Now why does the owner take this 20,000 rupees? That is taken that in case you do not pay installments on time, they can deduct it from your security deposit. If there is any defect in the house that is caused by you, if any appliance is affected or you ruin the paints, walls, etc., then the money is deducted from your security deposit and you will only get the balance amount. Say some scratches have come on the wall because of you, then your owner might deduct 2,000 to 3,000 rupees and refund only 16 to 17,000 of the security deposit. Now that is also the case with a contract costing. The contractee, that is a person who has given the contract to make the road, will define certain terms and conditions, that he requires this quality of raw material to be used. He wants the contract to be completed in 5 years, and such other terms are specified in advance, that is, before the start of the contract. So, the contractee generally keeps some amount payable to the contractor with himself as security deposit. If these terms and conditions are not satisfied by the contractor, the contractee will deduct the amount. Say 50 crores was a decided amount, and it was decided that the contract has to be completed within 5 years, that is, by the end of December 2019. But due to certain reasons, the contractor couldn't complete it by December 2019, and there was an extension by 1 year, so he could deliver the contract by December 2020. Now, because of this delay, the contractee might deduct a certain amount, say 10 lakh rupees, and might only pay 49.9 crores to the contractee. So, this retention money, the security deposit, is known as retention money. This acts as a cushion against any defect or undesirable work that the contractee upholds some money payable to the contractor. In some contracts, the contractor might have to deposit some security money from his own pocket before starting the contract. This is known as an earnest money. If the contractor is completed in accordance with the terms and conditions, then the contractee will return the entire earnest money paid by the contractor. If there are certain defects, then he will keep it with himself. So suppose, so in this case, 50 crores was a total rate of the contract, 10 lakhs the contractee did not pay due to delay in delivery of the contract. So the contractor finally received only 49.9 crore rupees. This is a cash received amount. Suppose at the beginning of the contract, when he was standing at 2015, 50 crores was a sale price, and the contractor estimated that a total of 45 crores will be the cost of the contract. So 5 crores is the estimated profit, that is a contract price over the estimated total cost of the contract. When you're standing in the year 2017, you have only completed a part of this contract. So you've completed only 50%. So because depending on this percentage, you are entitled to 25 crores rupees. So this is a value of work certified. And say till date, you have incurred around 15 crore rupees of this estimated 45 crores. So for now, you are at a profit of 10 crores. This is known as a notional profit. Before the completion of the entire contract, we calculate notional profit during the year ends so as to ascertain whether we have incurred more costs, whether at present we are at a profit or at a loss, and so on. So estimated profit is before the beginning of the contract, you estimate that a total cost, certain cost will incurred, say 45 crores. So estimated profit is the excess of the contract price over the estimated cost. Notional profit is at any given point of time during the contract. It is a difference between the value of work certified, that is how much the expert has said yes, your work is complete, minus the total cost incurred to complete that percentage of work. So we have seen what is value of work certified. Work certified is how much the expert is saying that it is complete. Work uncertified is the portion of the job where the contractor has finished the work but the expert does not certify it. Progress payment is a payment that you a part of the contract price that you have received till date. Retention money is the amount that the contractee keeps to act as a cushion against any defect or undesirable work. Cash received is the amount that is finally received by the contractor. So say a retention money of 10 lakh is deducted due to certain delays and defects, then the contractor will get 49.9 crores, which is the actual cash received. So just to have an overlook of all the formulas that we've gone so far are: the cost of work certified is the value is the cost of work to date minus the cost of work uncertified plus material in hand plus plant at site. Value of work certified is the value of contract into the work certified percentage progress payment is the value of work certified minus the retention money minus the payment to date cash received is the value of work certified minus the retention money notional profit is the value of work certified minus the cost of work to date minus the cost of work not yet certified. So you do not have to learn these formulas. As in when we'll do the questions, these formulas will become clear to you based on the concepts, and you will also be able to understand the meaning of these terms better. So we'll do a question based on these concepts in our next video. If you have any doubts in these concepts, you can post them in the comment section below, but you do not have to worry, because as and when we'll do the sums, these terms will become clearer to you and you will be able to understand the formulas even better. If you like the video, do share and subscribe. Thank you.